Derek DeFries, who is with Berkeley at least part of his time, introduced us to John, and perhaps you can do the introduction, Derek.
Sure, be happy to. Thank you, Howard. So good morning. My name is Derek DeFries. I know some of you who are attending, and I think it's sort of, I do miss your physical retreats, Howard, and your best socks contest. So
yes, too bad.
Apologize for that. I'm not wearing socks, by the way. I'm just gonna wait until I come back. I've been a lawyer for over 20 years in financial services, concentrating mostly in complex financial instruments and international payments. And I've worked with our next presenter in a previous role at Wells Fargo, and I've known John for over 10 years. I've watched his company grow from ideation. He was dropping hints when we were coworkers, and I was his lawyer, and finally took that idea life beyond the big banks. And so I've watched this company grow from its earliest stages to meeting some really critical milestones, which I know that John will mention today. It's also been a real pleasure to advise this company. So John, actually, I think it's best if I just let you take it from here.
Thanks, Derek. All right, let me do a quick screen share. See if I can figure that out. All right, can everyone see my screen okay?
Yep.
Perfect. Oops. Let's see if I can figure out how to present. All right. So at the end of this presentation, getting Derek to say nice things about you does not come cheap. So at the end of this presentation, when I want to send a payment to Derek to thank him for some kind words, I'm gonna pick up my smartphone, and with not much more than his email address, I can send him a payment, have it in his account in less than 30 seconds, right? We've all done it a million times. But if you are a business today, if you are a middle market company and you need to make a payment to a vendor, and particularly if that vendor happens to reside outside the US, there's actually a really good chance you're going to start that payment process with a piece of paper, with a physical form. You're gonna complete that form with a pen, and you're gonna fax it to your bank. Particularly if you don't work with one of the largest institutions in the country, you're gonna fax that to your bank. You're gonna email it to your bank. If you're lucky, maybe they have a form online that you can complete and submit that way. But regardless of how you get the information to your bank, you're going to kick off a series of manual processes. And those processes includes multiple manual reentry of that payment data into multiple systems, a number of phone calls to confirm the details of the transaction, to gain approval for the transaction. And so as you can see, this is a very manual process, and manual means cost and risk of error, risk of fraud, for both the bank and the business. Despite all this, there has been very little innovation in the B2B payment space, particularly in the middle market and particularly outside of the largest banks in the country. So why is that? Well, businesses have a sense of comfort in dealing with their bank, for starters, right? They want to deal with their bank. They trust their bank. They feel secure doing a transaction through their bank, versus going with a startup or a fintech where they have less experience, less trust, potentially more to lose. In addition, because the bank has access to their full liquidity profile, they have the ability to send larger payments, which are generally needed for the B2B payment space. My name is John Dobson. I am the co-founder and CEO of PayRecs. As Derek mentioned, I spent the first part of my career in banking, advising large companies on international payments and risk management. My co-founder is Steve Habegger. He is our CTO. He spent his career, fortunately for us, he spent it outside of banking, leading technology and innovation at fast-paced growth organizations and startups. Together, we created PayRecs with the goal of innovating B2B payments, and specifically to start cross-border B2B payments. So we created this platform that aligns the needs of both banks and the business customers they serve in one innovative solution. Banks and businesses share three common problems around international payments. First, it's heavily manual, as I mentioned. That obviously introduces cost and risk. Second, they often lack access to key services that they need to be able to compete in the global marketplace. And last, those things can result in lost revenue, lost access to important markets, lost access to important customers. Through PayRecs, we seek to solve all three problems for both the bank and the business, delivering an integrated platform that automates the vast majority, if not all, of those manual processes, reducing cost and risk for both the bank and business. We deliver a full suite of international payment products and services, giving businesses access to the global market and banks the tools they need to deliver to their customers to better serve them. And finally, we deliver revenue for both the bank and the business, giving the business access to customers around the world and giving the banks new services that they can provide to their existing customer base. Through PayRecs, businesses can send payments to over 100 different currencies. They can receive payment and hold balances in 36 different currencies, giving them a chance to compete against the largest businesses. Banks get the benefit of that reduced operational cost and risk, and they can deliver key services to their customers that otherwise might result in those businesses leaving for larger institutions. In 2018, Goldman Sachs said that the global B2B cross-border payment space was worth $290 billion. The good news about that is when you start with a market that large, even if you just go after a slice of it, you're still in a pretty big market. So to start, we are focused on the US cross-border payment space, specifically for small and mid-sized businesses. We chose that market segment because candidly, it has seen the least amount of innovation and it is the most ripe for reinvention. Businesses we have found are anxious for new solutions, and the banks that serve them are excited to serve as key distribution partners for us in our service. So what does this cost? Who makes what? How do we get paid? Well, we get paid when a customer completes a transaction. We partner with banks. They distribute our platform to their customers. We generally become their exclusive provider of international payments. And when a business makes a payment, we take a small fee for that transaction. If it's an FX payment, we take a small percentage of the transaction. On single currency transactions, we charge a fixed dollar cost. We share that revenue, a portion of that revenue, back to the bank, creating a new revenue stream for that institution, taking what was previously a cost center and making that a profit center for them. The bank also has the ability to charge their customers additional fees. We don't always recommend it, but they can. They can charge access fees to their customers for using the platform. They can charge fees on top of our transaction fees as well. In some instances, depending on our relationship with the bank may also pay us a monthly SaaS fee for accessing the system. So how do we stack up against the competition? So we believe there are two key differentiators between us and the majority of the cross-border payment space. The first is we are focused on B2B payments first and all the unique challenges that businesses have making payments that are different from an individual making a payment, from me paying Derek for those kind words at the beginning of the presentation. So that's number one. Most of our competitors are first focused on peer-to-peer payments or B2C payments. Second, we use the analogy of Visa, MasterCard versus American Express. Our competitors tend to fall in the American Express bucket. They are independent, they sell directly to the end user, and they are truly a competitor to banks. We are more like the MasterCard Visa model. We are a partner to banks first. That is our primary function, is to serve as a partner to banks, and then become a critical service through those banks to their business customers. We think this gives us some really unique advantages and opportunities in the B2B space. One of the challenges with B2B payments is liquidity and access to capital. So business payments tend to be larger. We have customers that send payments at maybe $1,000, but we also have customers today sending payments as large as $1 million at a time. And so those obviously require access either to credit or visibility into the customer's available balances. By partnering with banks, integrating with banks, we're able to get a real-time view of their available balance or available credit and liquidity profile, so they can send larger payments virtually instantly. With our initial partners, we're able to directly debit from a customer's account in real time, reducing credit risk for both us and our bank partner. So where are we today? So we brought on businesses directly to our platform. In spite of my previous comments, our initial pilot customers, we brought on directly so we could learn from their usage. We could learn about the key features and functionality that they need to do their job every day. We have 8 active businesses on the platform generating payments on a regular basis. As I mentioned, as low as a few $100s at a time to as high as $1 million at a time. We have our first bank partner set to go live in mid-May. This partner will replace their existing correspondent bank with us. We will become the exclusive provider of international payment transactions for their customers. It brings us a critical group of new businesses to the platform. Over 350 businesses will be migrated to our platform initially. It's then our job to work with the bank to market to the rest of their customer base to help grow that number of business users on the platform. It also brings us over $100 million of annual payment volume, a number we certainly expect to grow quickly after onboarding. This bank partner is coming to us through an integration and an integration partnership we created with Q2 Software. Q2 is a premier provider of online banking solutions, both commercial and retail banking solutions, to over 400 financial institutions around the country. Integrating to Q2 gives us the ability to virtually instantly integrate to these over 400 banks and credit unions, delivering, again, greater value, delivering kind of an unfair feature advantage, as we like to think of it, to both the bank and the business. Working with Q2, we have access to, speed our sales cycle, gain access to market to these banks more quickly. And channel partners like Q2 are key to our go-forward distribution strategy. Through a single channel partnership with a key software vendor like Q2, we get instant access to hundreds of banks. It helps us expedite the sales cycle, expedite the vendor management process with the bank. And those hundreds of banks get to deliver a product that candidly has some unfair advantages that a fintech that isn't integrated to the bank could never deliver to those customers. They give us access to potentially millions of business to market our solution, where they can use the platform to send and receive payment around the world. They can share payment data with their vendors. It's one of the most popular features on our platform today. And they can also use our platform to track payments. Both the sender and the beneficiary can come to our platform to see the status of a payment at any time. We have been funded through angel investment to date. We've used that angel investment to get our first product into production, generate our first transactions and revenue, create our first bank partnership, and our first channel partner integration. We're in the process now of raising our first institutional round, targeting the end of Q2, the beginning of Q3. The goal of those funds is to help us add more bank partners to the platform, create more key channel integrations, and grow our team to support our rapidly growing business. By the end of the year, we expect to have over 1,000 businesses active on the platform, over $300 million of annual payment volume, and greater than 1,000 payments a month. We believe that the B2B market is the most ready for change. It's the market that has lagged behind all others, and all the necessary parties are anxious and excited to see innovation in that space. By partnering with critical technology vendors, we can drive rapid adoption, delivering immediate value to both the bank and the business, and creating a very low barrier to entry. I've already talked way too long. I'm happy to take questions, checks, whatever you want to throw at me.
So thank you very much, John. We're running short on time, but let me throw in a question, pending anybody else's question. So can you describe the profile of the banks that would be your most likely customers? I mean, what's the band of banks, what big size-wise, profile-wise, that would most want you to service them?
Great question. So our initial focus is on kind of truly regional banks. So, 5 billion to 20 billion assets under management, have a large base of business users, but aren't large enough that they've created their own kind of international payment services internally. We do have microservices that larger banks have reached out to us about adopting within their ecosystem. So we know there's opportunities for us to push further up the chain as we build out our business. We've candidly avoided that to date, but we know there's opportunities to expand those larger banks as well. But today we're focused on the true regional bank, 5 billion to 20 billion.
Okay. And I think you may have alluded to this, but what's your go-to-market to target that particular group?
Yeah, focusing on, that bank group, they can allow us access to, as I mentioned, potentially millions of banks or millions of businesses quickly. And, really our go-to-market strategy is partnering with key technology vendors. We don't want these banks to have to create an integration every time, right? We don't want to have to create that work every single time we sign up a new bank. We want key distribution points where integration is already active and live.
Great. So I think we're out of time, but that's been a very interesting presentation, John. Sounds like you're making great progress, and congratulations on the launch.
Sounds great.
So thank you for your presentation.
Thanks, Howard. We appreciate the opportunity.
Hope you'll stick around for the rest of the program.
Absolutely.
All right.